talk about something else that President Trump came up with, and are quarterly reports necessary for public companies? Well, President Trump did come up with the idea of switching company reports from quarterly to semi-annually. It appears Trump believes this will help companies focus more on the long-term business performance rather than fixating on short-term quarterly reports or quarterly numbers. There's also hope that they'll save time and money for public corporations, what they will, because it's expensive to put those reports together. And a quarter, as you know, comes very quickly. So it's expensive, hard to do, and it's something that could make some sense. And for long-term investors, well, I think there's some possibility thought there.
Yeah, I mean, this isn't just kind of Trump saying it at this point. Now, the SEC has actually acknowledged that they are actively looking into the plan. As a spokesperson for the agency stated, at President Trump's request, Chairman Paul Atkins and the SEC is prioritizing this proposal to further eliminate unnecessary regulatory burdens on companies. And we did actually hear from SEC Chair Atkins here, just saying that he has talked to the president about it. And in principle, he thinks to propose change in what our rules are now, I think would be a good way forward. And then we'll consider that and move forward after that. And he did say essentially it would be left to the companies to decide whether they switch to semi-annual or stay with quarterly.
Yeah, I'm wondering, I don't know how many companies would say with quarterly. That would be kind of strange.
I mean, you get this in Europe right now.
Europe is every 6 months.
Europe's every 6 months, but some companies still release quarterly numbers, quarterly profits, things like that. They don't do
maybe
a
if you're a newer
full-fledged
company and you want to get that data out, maybe.
I don't know. Some of the big companies do as well.
Yeah.
But it's not as tedious because it's not like a full release. It's like, oh, this was our profit for the quarter.
Yeah. No guidance, just numbers. Well, being a long-term investor, we can see the benefits of changing this requirement, as one quarter should not dictate your decision on whether you should buy, sell, or hold any business, any stock, any equity. Ultimately, a change like this wouldn't have a real impact on my investment philosophy. And if this enables companies to focus more on the long term, help with cost, I would be in favor of giving companies the option to make this switch. I mean, it makes sense because we've had companies in our portfolio, some of them for 10, I think maybe even 15 years. We do read the quarterly reports to make sure what's going on, but if they didn't have guidance on the quarterly report, we're not going to make a difference for us. It's based on what we look at the value of that business is.
Yeah, I mean, if you look at a 6-month period, I mean, basically when you look at a cash flow statement, an income statement, you're looking at a period of time. So now instead of looking at 3 months, you're looking at 6 months. If you're looking at a balance sheet, that's just a snapshot of where they're at in that point in time. By going from 3 months to 6 months, it's not like you're losing data. You're just losing the frequency of data.
Right.
The data still remains the same.
Right.
It's just you're not getting it every quarter, which, as you said, shouldn't necessarily be a reason to buy or sell an equity. If you get like one bad quarterly report, we're generally not going to sell that business.
No.
We want to understand what's going on. But I mean, kind of speaking to that point, I mean, looking at the long-term focus, both Jamie Dimon and Warren Buffett have spoken out against not necessarily the quarterly reports, but the quarterly guidance. And in a 2018 op-ed piece for the Wall Street Journal, the pair said, in our experience, quarterly earnings guidance often leads to an unhealthy focus on short-term profits, very important here, at the expense of long-term strategy, growth, and sustainability. So, I mean, this is something that we look at being long-term investors. Again, quarter to quarter is not as important to us of what's going to happen in the next 2, 3, 4, 5 years.
And this could help some companies, that say, gee, we don't want to come public, we want to be private. I mean, a lot of private equity now. Maybe this will help with that because as to the regulatory burden, I'm sure there is hope that this would help entice companies to come public. There has been a huge shift in companies staying private longer. And I do believe the compliance piece deters some from coming public. There's just a lot to do public. I've heard CEOs say, it's a lot to do, so we're going to stay private for a little bit longer. I'm sure there's other reasons for staying private, including control and other liquidity avenues that weren't as prominent years ago. Nonetheless, it is concerning that the number of publicly listed companies, and I didn't know this, when I saw this, like, wow, number of public listed companies in the U.S. has fallen from more than 7,000 back in 1996 to only around 4,000 today. That's almost a 50% drop in companies being public, and it's too much of a burden. And I like the publicness because you got to disclose everything. I worry a lot about private companies, private equity, because I don't think they're disclosing what they should be disclosing.
Yeah, and I mean, kind of talking about the other avenues. I mean, I think I saw on Friday, I think XAI, Elon's AI company, I think he got like a $10 billion raise and gave the company like a $200 billion valuation or something like that. I mean, that used to not happen where you would do these private raises and raise $10 billion.
Right.
I mean, that is, again, I think one of the big reasons why companies are able to stay private, because if you need liquidity, well, you needed to go public to raise funds and do that. But now you can get $10 billion in the private market. Why go public?
Yeah, and you know, when I think about it too, that there's just things being private that worries me, and I like being public. You can see through, but maybe it's not needed every quarter.
I mean, I'll look at us as a very small microcosm of it. We are a private business. Would I want to answer to shareholders and answer to the SEC and all these filings and do it? I mean, if you look at like the SEC filings on a public company's website, it's like, oh my gosh, the number of filings that they have to do is just crazy. I mean, I'm not saying that all filings are bad, because it needs to be there so you can get good information. But I think sometimes it's obviously overkill.
You know, and also too, I think for short-term traders, they don't care. They don't look at it anyways. You know?
No, they don't look at it anyways. But I was going to say too, to the quarterly reports, and we've talked about this a lot before, where, you know, one reason this might be beneficial is a lot of times companies will just try and massage earnings a little bit to try and hit that quarterly number, where if you do it every 6 months, I think it gets harder to massage those quarterly numbers. And that's where, again, that long-term focus, I think, could weigh out. And we'll see what happens. I mean, this is not going to change tomorrow, but you know, maybe 6 months from now, we'll be talking about a different situation.
Said, wouldn't bother me. I'd be fine with it. So,